This is RP here from Billionaire. So this is our YouTube channel. Me and Raghav records video on technical analysis. So Raghav specializes in Camarilla, pivots, and price action, and I follow different methods. Actually, I follow indicators, price action, Elliott waves, and option chain. That's quite a lot, but yeah, it gives you a better view of 360 degrees. That's what I believe. Hence, I follow these all methods. Enough about the introduction. So this is our channel. If you want to watch any videos, you can visit, search from this bar, and then you can look for short videos that we created on daily basis or any educational videos that we post. So this was, by the way, last week's analysis that we posted. So we are doing weekly analysis. This analysis was done 7 days ago. That is on 30th of April 2022. So today it's 7th April. We are going to do analysis for next week. So next week, 10 to 14th May, for this analysis will be considered. So without wasting much time, I want to quickly give you one idea for this video. So if you remember your childhood games, then duck hunt was one of the game. So here you can see that the guy is shooting the target, which is duck, which is flying. Okay, and another image is like this. So here you can see soldier shooting down a moving target. So why we are discussing these two images? Because we in a financial market as well are aiming at moving targets, right? The markets are moving and we are aiming at moving targets. So to aim those moving targets, we need to aim up front, right? We should not aim at where the object is. We should aim where it is going. So that's the purpose of this video, or that's the main theme of this video, you can say. It's we have to lead the target, right? We have to aim up front. We have to project the move. We have to forecast the move of the markets. Then we will be more successful in our trading style. So with that, let's start our analysis. First part we are going to check is indicators. So on my screen, you see indicators. Last time we did analysis on this candle. After this candle, we mentioned that Nifty would break downside if it breaks 200 EMA. So this particular line is a 200 EMA. This is 13 EMA, and the yellow line is 48 EMA, and this is 100 EMA. So these are all moving averages. So moving average based, we had seen that it was consolidating between all these moving averages. Also, the around line was parallel. It was suggesting consolidation. Now it has moved above 70. Red line has moved above 70, and green line has moved below 30. So these indicates bearish signal. So around lines, when they are at extreme, it indicates the trending markets. Okay, so this is around indicator is similar to that of ADX. Whenever you see ADX about 25, it is a trending market, right? It is one directional market. So that's what it signifies. So around indicator here signifies that there is an extreme trend on the downside, actually. Okay, because around red line is up. Earlier it was consolidating. Okay, and then now it has come to the extreme negative zones, just like situation which was here, right? Situation which was in this area. So earlier also it was consolidating, then it went to extreme negative, and then we see this much of fall, right? So similar thing here expected to happen as per the Aron indicator as well. And we have broken 200 EMA, which was at 16,870. Okay, and even RSI has turned to bearish zone. So it's almost touching 30. So in next session, it should drop below 30, or yeah, next or 1 or 2 sessions. That's what it could happen. So that's all on the indicator front. Here we see a big gap down opening, and Nifty has made a doji candle. It is indecision, by the way. Okay, so it can, if it breaks this low, then it will fall further. So that's what we can consider from the indicator. So yeah, indicators also give a better picture. We will use MACD as well, and we'll check at the end of the video what is happening with the MACD. By the way, if you're not able to see something clearly, you can post it into the comments and tell me, like if I have to zoom in the chart, or something is not clear to you, or some voice, if you are not able to hear properly, these things you can ask in the comments and let me know. Keep it interactive. You can ask any doubts. We are there to clear all the doubts. So moving further, next part we are going to check is based on price action. So let's check what is going to happen in the price action. So on the screen, you see Nifty's daily chart. On TradingView, I have opened this chart. So we have discussed this many times that Nifty was trading in channel and it has broken once. Okay, so this is how you plot the channel, and these are the points, reference points, which we need to use for plotting the channel. Here, one time it has broken below the channel, then pushed back up, took the resistance, and now dropping. So we can expect minimum it will touch this channel, okay, and then it will go up, okay. But our view is breaking this, okay. Why that? We will tell you in more detail, or you can watch our previous videos. So yeah, so this is how we see a price action channel of Nifty. So moving further, let me remove this channel. Okay, let me remove this channel. So we see multiple swings here, right? So this is one swing. So this is swing high, this is swing low, swing high, swing low, swing high. Okay, so market is forming lower, lower low and lower high, right? So this is the pattern that is following, and one more low is possible because we will tell you based on Elliott Wave theory, and also this particular rally has been dropped more than 50%. Okay, more than 50% this rally has been dropped. So price action also suggests that we are going to drop more. So let me draw one more trend line to tell you that if you look it another way, it is looking like an expanding channel. So this is how you plot an expanding channel. Okay, so this is how you plot the expanding channel, and if you take a look closely, and if you consider this, so this move can further drop down towards this. Okay, so if you consider the straight line, okay, like this, it will drop towards this, what we can assume. So 15,300, 200 levels it can come. Another way you can get the targets are like this, based on price action. Pick up the price range tool on TradingView. So this is price range tool, it is available here. You pick that tool, pick the swing highs, pick the swing low. Okay, so the next move was bigger than this. Okay, next down move was bigger than this, right? A little bit bigger than this high. Okay, so this is one move. Okay, this is one move which was 2,000 points down, then more than 2,000 points down here. So now similarly we will have a bigger move. Okay, let's check what was this move. Okay, it's 500 points more. So we can expect in terms of channel minimum low towards 15,463. Okay, so that's what the target coming in as per the price action breaking this low. So what was this low? 15,671, right? We are expecting it to break it as per this expanding channel. Okay, or you can even call it expanding triangle maybe. Okay, yeah, so this is how we look at it. Minimum this one, and it can even go below depending on how much longer it stalls and how much longer it takes time to go towards this channel line. So anything below 15,300 to 15,000, that's what we can expect going on the downside as per the price action. So this is the how you can draw the targets based on price action. So yeah, hope you understand here. And to tell you more based on indicator, I use MACD extensively. Even in day trading, MACD indicator is useful. So here we see that MACD did not make a fresh fresh divergence. Okay, so there is no divergence here. Considering the previous fall, MACD has made a new low along with the price. So price has made a new low and MACD has made a new low. So there is no divergence here. So what we expect is MACD to come down, make a divergence here, and then the price will fall here. Okay, so the price will have new low like this, and MACD will make a divergence, and then it will go up. Okay, and from here we are expecting a new high. Okay, so that's how we are that's what our theme of this video is, aiming up front. Okay, aiming ahead, forecasting the market with the price action, with indicators, with Elliott Wave. So this is how we are looking at the markets, and we are expecting a low somewhere near 15,300 to 15,000 as per the price action. So it should not break this trend line because it has respected it once. Actually, it has respected it once because first time it was drawn. So this trend line it should respect, and this expanding channel it should respect, and from there it should bounce. So this is how we look at price action based targets of Nifty. So without further delay, let's go ahead and check the Elliott wave. So now a little bit confusions will be there, but stay with me. I'll try to explain in simple words and as simple language as possible. So this is the first Elliott wave chart. So Elliott wave theory, we discussed many times. So Elliott wave theory is like this. Okay, 5 moves up, 3 moves down. 3 moves down has a Elliott wave called as zigzag correction, and it has 5 moves internally. A wave has 5 moves. Okay, B wave has 3 moves, and again C wave has 5 moves. Okay, like this. So while coming up, it will have 5 moves and 3 moves down. But this is very simple explanation of Elliott wave, and this is simple correction. There are a lot of other correction patterns. So we are going to check correction pattern here. One consider one correction pattern, that is a zigzag correction, which has 5 wave sequence down as A wave, B wave as a triangle A, B, C, D, and E. Okay, E completed here. E is a little bit truncated or smaller, but it should go 50% of D length. Okay, this is D wave. Okay, D wave finished here. So it has went up 50%, almost 50%, some points less than 50% actually, when you check that. But yeah, this should be acceptable triangle pattern. And after that, we are expecting 5 wave moves down 1, 2, 3, 4, and 5. So fifth is expected to be extended wave. Extended meaning to say a larger wave. So extended waves are usually bigger and sharper. It has bigger gaps. So be prepared. If it breaks this channel or this low, we can expect it to have an extended fifth wave. So extended fifth wave is expected as per the Fibonacci extension to reach to this area. Okay, these two levels. So when you plot Fibonacci extension on these points, okay, so this is these are the 3 points that you can consider to plot the Fibonacci extension. Okay, Fibonacci extension tool, let me show you. Okay, Fibonacci extension tool is this one. Okay, you can get it from here on TradingView. So this is how you get the targets with the Fibonacci extension. By the way, we discussed in more detail in the last week as well, so you can watch that video. Okay, and you can get the targets, more targets of Z wave directly, how the targets were drawn from on a daily chart. This is, by the way, 1 hour chart where we are plotting the internal moves with the Fibonacci extension. If you want to check the daily targets, you can watch that video. So yeah, this was the video. Okay, this was the video that you can watch. Okay, so moving further, you have to note down the targets. So this is something below the previous low, right? 15,671. So this low is even acceptable. So what we are saying here, that we should be ready with a good list of stocks around 15,300 to 15,000 level, and we should be ready for shopping list. We should not jump, and we should be ready with our levels. And the day it breaks the previous low, and next couple of days it will be a shopping day, at least for me. You can decide yourself. You can ask your financial advisor. This is an educational video. You can consult your financial advisor what to do. And yeah, this is just to tell you where we are reaching in terms of Nifty. Different tools and different methods will give you almost similar targets. That's what I believe, and hence we are discussing those methods. So here we are saying that the final wave is in progress going on the downside as per this particular method. So this is case 1, by the way. So case 1 has an alteration view. We are expecting this to be completed, okay, in this view itself. So tomorrow if Nifty opens gap down below 16,376, okay, if it opens gap down, by the way, globals have closed flat, so you can consider a small gap down opening and a breaking of this channel. Okay, so this will be an aggressive opportunity for us to go short. Okay, otherwise what we can do is we can wait for a break of this swing, okay, or the channel. So channel itself, here you can see that, right, the yellow channel that is plotted, it is exactly at the bottom of the channel. So that is one fear that I have. It should not bounce back up and then drop. Okay, so that fear I have. But yeah, let's see what happens tomorrow. So we are going to discuss all the possible cases for next week. So tomorrow, if opens gap down completely and breaks the previous low of 16,340, I believe. Okay, so 16,340 was the low. If it breaks that, then boom, we are going down. Okay, so that is one way to consider the downside. So don't expect these targets to come on the next day. It will take 3-4 days, or even I'm expecting 18th May is the date. Okay, somewhere near this, I'm expecting a bottom to be made 18th May, and one more date is coming as 24th May. So I have used different methods to come up to these dates. So time cycles and Fibonacci I have used to come up to these dates. I'm more positive that it is going to make a low here. Okay, so this is how we look at it. So yeah, the targets will not coming in a one day. We are doing analysis for an entire week. So anywhere in these days, we can expect the target to come. And yeah, so do remember that. So yeah, first case we discussed, if it opens gap down below this 16,376 and then breaks 16,340, then we can assume that we are assuming that if it opens gap up above or breaks 16,484, okay, so this swing, if it breaks, it is going to go 16,520 as a view. So fourth will be little in that case. If we downside, once it break gaps, if it opens gap up, assume that it is up around 100 points up, it will go and then it will drop. Okay, while going up, it should not break this high. Okay, 16,624, it should not break, because that is the wave once end. Okay, so as per the Elliott Wave theory, fourth wave should not break the end of wave one. Okay, so that is the basic rule. If it breaks that, then this 1 2 3 4 count is invalid. Then this is something else. That's what we can conclude here. Okay, so hope you understand here the first case in which we are considering fifth wave going on the downside, but there are two variations in it, and we have to wait for break of this or this, then we can consider 100 points up and then down. Okay, or if it gaps down, then it's a better signal for us that it is going down further. So second case, or alternative wave count, here we have considered a triple zigzag correction down as W wave. Okay, 1 2 3 4 5 waves down, W wave. Okay, and then there is internally ABC. Okay, ABC. So these are W, X and Y correction again. Okay, here Y is little bit truncated, it didn't break this high. So this is the case that we are assuming here. And after this, so this is a complex correction, you can say, or you can even call it as a larger degree double zigzag correction, where W, X and Y will be there. So here what we are seeing is a leading diagonal pattern. Okay, so in this again we need to wait for break of 16,623. So the case that we discussed, if it breaks 16,624, then the Elliott wave count of zigzag correction will be invalid. Then it will be a double zigzag correction. In that case, what we can assume is 16,623 break, we are going towards another 100 points, 676, which is 0.32 Fibonacci, or it can even extend towards this. Okay, so it can go like this and then drop. Okay, so these possibilities are there. I will consider this as a low probability considering the consolidation in this zone. Okay, so this was a tight range for the entire day, and there was indecision. So I doubt that it will break 16,623. So out of I'll give this a 20% probability out of 80%. Than the zigzag correction. This zigzag correction, I will give 80% probability. By the way, I have bad reputation in terms of giving alteration. Most of the time my alteration comes true. So hope this doesn't happen this time. And this consolidation breaks downside. That's what we hope, and get this correction over with. So yeah, so the alternative wave has two levels to watch for: 16,736 and 980. So looking at this consolidation, even if it breaks this, I'm expecting this much. It should go 16,736, somewhere near this, and then it should drop. Okay, so whatever swing it makes going up, that will break of that will give us the idea for the down move. So this is one way. Here we are considering a leading diagonal as a wave A. Okay, wave A has internally 1 2 3 4 5 moves. Here fourth has broken the like a low of this wave, so we are considering this as a leading diagonal, B wave, and then C wave on the downside. So this is a complex correction that we are assuming once it breaks 16,624. Another way, and this has 1% probability, you can say, and because here W wave was considered, the X wave was again considered as a triangle. Okay, X wave considered as triangle, and here A, B, and C wave considered at the channel low. And if this view is valid, then it will shoot up towards the larger trend line of the channel. Okay, so this will be very short Y wave, still a valid one, which is more than 50% of this length, little bit more than 50% of this length, so that is still valid, but this looks kind of fishy. So yeah, this has a low probability X, and then slow drop on the Z wave, breaking the previous low of 15,674. So this is what we can assume as a triple zigzag correction. So W is a one wave, Y is a second wave, sorry, Y from here is a second wave, then Z as a third wave, which is called as triple zigzag correction. So this is zigzag, this is zigzag, and this will be a zigzag. So this will be a triple zigzag correction, slow drop on the downside. So this has a low probability. So we discussed all the possible cases with the Elliott wave. Now, hope you are not confused, and you can rewind and watch again. There is still one day left for tomorrow. You can write it down the levels if you want. And moving on to the next, let's check the option chain data. Option chain data is specifically useful on the expiry day, but on the other days we can get the range. So best to get the range for the expiry. So for this expiry, 16,000 right now is the major support. On the downside, 15,500 is there, but this is the biggest number on the put side. So put side has the highest number at 16,000 right now. Okay, so in this current expiry, if it breaks below this, it will bounce back. Okay, it will bounce back, consolidate, and then drop again. So 16,000 is a major support for this expiry. So there are 4 days to go. Okay, so let's see what happens during these during these 4 days, 3 days actually, 1, 2, 3, right? So on 12th there will be expiry. So hope it breaks before that and sustains below that, and it doesn't come back up above 16,000, and then next couple of days it will consolidate and drop. So yeah, so if it on expiry day, if it is trading below this, then it will bounce back, consolidating. If it is too much deep below 15,800, let's say, then we should not assume that it is going to come back up. Okay, you might be hearing a lot of crackers, but yeah, the entire day I have heard a lot of them. I don't know what it is today, but yeah, a lot of crackers I can hear. So back to the topic, 16,000 is major support, 15,500 is the next support. Okay, break of one support will take it toward the next support. Break with the bigger margin, let's say 200 points, it breaks, then the next support area will be becoming level to watch for. So on the call side, on the flip side of call, we see major resistance at obviously at 17,000. It's not going there anywhere. Okay, so all the call writers, they are eating the premium of 17,000 call. So that indicates the bigger number here, then the bigger number at 16,700. So this is the second major resistance. So and 16,500 is the third major resistance. Okay, so third major resistance, what I'm expecting is this to become bigger than 16,700. Okay, so more and more call writers or sellers will be occupying this to make it zero. Okay, so this can happen, and yeah, market will be trending downside in that case, right? So whenever there is a call writing, the markets go downside. So here you can see there was huge call writing happened on all these strikes, indicating a bearish bias, or you can say there was a gap down opening. So this is obvious. So yeah, overall you can say 16,500 and 16,500 and 16,000 is a current expiries range. So we should hope it to break below this and trade below 16,000 in this expiry. There are 3 days, 1 or 2 days should be sufficient to break below this, and the market is bearish and we are expecting a downside. So we will be keeping you updated during the weekdays. Do watch our short videos. We'll also create a bank nifty video tomorrow. So that's all for today. Have a great day. Bye bye.